Have you ever wondered how the stock market works? Well, let's break it down. Think of the stock market as a grand marketplace, bustling with buyers and sellers. But instead of goods, they're trading shares in public companies. It's a place where fortunes are made, dreams are realized, and sometimes where risks lead to losses. It's part economic powerhouse, part thrilling roller coaster. Now that you have a basic understanding of what the stock market is, let's delve deeper into how it operates. So, how does the stock market function, you ask? Picture a bustling marketplace, but instead of fruits and vegetables, it's stocks that are being traded. These markets are known as stock exchanges, with the New York Stock Exchange and the Nasdaq being among the most prominent. They provide a platform where buyers and sellers can negotiate prices and make trades. Now let's talk about the players. On one hand, you have the buyers who are looking to invest in a company by purchasing its shares. On the other hand, you have the sellers, which can be other investors or the companies themselves. They sell shares to raise money for various business activities, from launching new products to expanding into new markets. But how are the prices determined? It's all about supply and demand. When more people want to buy a stock, high demand, than sell it, low supply, the price goes up. Conversely, when there are more sellers, high supply, than buyers, low demand, the price goes down. And what about the companies? Why do they list their shares on these exchanges? The primary reason is to raise capital. When a company decides to go public, it sells a part of its ownership in the form of shares to the public. This money can then be used to fund growth and expansion, thereby increasing the company's overall value. With this knowledge, you're beginning to grasp the mechanics behind the stock market. Ever heard about stock market indices like the Dow Jones or the S&P 500? Well, these are essentially a snapshot of the stock market's performance. Think of them like a barometer, giving you an indication of the financial weather. Let's break it down a bit. Each index is made up of a selection of stocks. For instance, the Dow Jones Industrial Average includes 30 of the largest and most influential companies in the United States. The performance of these chosen stocks collectively paints a picture of the overall market trends. So, when you hear that the Dow or the S&P has gone up or down, it's a reflection of the general direction in which the stocks within that index are moving. It's not about individual stocks, but the market as a whole. In other words, these indices serve as a kind of financial pulse check. They provide a quick, broad view of the market's condition. Indices then are a useful tool to gauge the health of the market. Now that you understand how the stock market works and what indices are, you might ask, why should I invest? Well, one compelling reason is the potential for earning returns on your investment. When you purchase a share of a company, you're buying a piece of that company's future profits. If the company does well, so do you. But let's not sugarcoat it. The stock market carries risk. Prices can go down as well as up, and sometimes they can go down a lot. However, historical trends show the potential for significant gains over the long term. In fact, investing in stocks has consistently outperformed most other forms of investment over the long haul. So what's the key takeaway here? Patience and a long-term perspective can go a long way. And despite the risks, the stock market offers one of the most accessible ways for average people to invest and grow their wealth. While investing in the stock market isn't without risk, it can be a powerful tool for building wealth. So we've covered the basics of the stock market, but what's the key takeaway here? The stock market is an intricate marketplace, a bustling hub where buying and selling of company shares takes place. It works on the principles of supply and demand, with prices fluctuating based on these dynamics. The stock market is not a mysterious entity, but a system that reflects the health and vibrancy of the economy. We've also delved into the role of indices. These are like the pulse of the stock market, offering a snapshot of its overall performance. Indices like the Dow Jones or the FTSE are essential tools for gauging market trends and making investment decisions. And why invest? Despite the risks, the stock market offers potential for growth and wealth accumulation, unmatched by most other investment avenues. It's a chance to be a part of a company's journey and reap the benefits of its success. Remember, understanding the stock market is the first step towards making informed investment decisions. Happy investing!